Thank you, Jeff. Good morning to everyone. My name is John Carmichael. I'm president of Nestlé's Pizza and Snacking Division. And by way of a quick introduction, I've been with Nestlé. I'm actually in my 20th year with Nestlé now. The bulk of that has been spent in marketing. The bulk of my marketing experience is in pet food, very similar to Jeff. I've had leadership positions in marketing in pet food as well as in ice cream in the sales organization for Nestlé USA. And most recently was the deputy for North America for Chris Johnson, head of the zone. And it is a pleasure to be back in the U.S. to run the Pizza and Snacking Division. This is a new division, a new setup for us in the U.S. to bring Hot Pockets essentially together with our pizza business. And it makes a lot of sense. It makes a lot of sense on the front end because these essentially share an overlapping consumer target that you'll see as I present. And we have a lot of opportunity to share and leverage insights commonly across these businesses. Additionally, on what you might consider the back end or the product end, there's a lot of similarities in the product itself. The technologies, the baking, the dough, the sauces, the topping, very similar product profiles. And so we're looking forward to driving synergy with the two. I'm going to go through this presentation rather quickly to ensure that I get the depth that's relevant for you, but also leave plenty of time for questions at the back. And I'll start here with the Hot Pockets business. Hot Pockets is a business that's delivered roughly a 2% CAGR over the last 3 years. Which had a little bit of struggle in the most recent history, but we feel Hot Pockets is well positioned for long-term success and profitable growth. And we base that on three specific things. The first is that this position is this brand is well positioned against snacking. And as consumers are changing the way they eat, has been talked about a couple times this morning, from 3 basic meals into mini meals and snacking, especially with younger folks in society, this position, and specifically the Hot Pockets product, is really well positioned to draft off that growth. The second is in the consumers that we're targeting with this brand. Specifically, the millennial and Hispanic consumers are both large consumer bases today, but represent some of the most significant growth in the categories, and relationships with them today will keep our brands vital for years to come. The final thing on here is we believe there's significant profit pools yet to unlock on this business. Some of that will come from expansion of the Hot Pockets business itself, which is above average profitability for Nestlé USA. But as the snacking world continues to change and evolve, there are new types of snacking and new usage occasions that are occurring, and we feel there's a lot of potential to move the Hot Pockets business into those. In the short term, there are some headwinds that we will run into for the balance of this year before we get to some of the medium and long-term growth. Specifically, as Jeff talked about, the SNAP business is disproportionately hitting our Hot Pockets business. Having a value-oriented business is actually a fantastic competitive advantage during an economic environment like we are today, and so we do receive some great benefits of that. But in the short term, this is taking dollars out of pockets from consumers that are overrepresented in this Hot Pockets business. The second is a product withdrawal that happened earlier in the year on the Hot Pockets business and has created some short-term gaps in product quality that we'll need to bridge over the course of the next few months. As we look to elevate this particular brand, there's 3 platforms that we'll use to do this. But before I even go into those, prior to those 2 headwinds I just referred to hitting, the Hot Pockets brand, off a very successful relaunch in 2013, was already seeing growth in both penetration and volume. So we very much see this as a return to growth in some of the fundamentals that we had in place before. But 3 basic ways to elevate this. The first is heating up and improving the equity of the brand. The second is innovating, bringing in incremental users and occasions. And the third is winning at retail and effective execution. And I'll take these one at a time. On the brand, what's important to continue to do in this business is to elevate this business above simply a convenience product solution and putting it more in line with consumer lifestyles, especially with the millennials. And what you've seen on this brand is a nice tonality that resonates with those individuals and a personality that we will continue to extend. We'll support that with 2 basic pillars here. The first is around product quality and real ingredients. And especially with a very recent recall or withdrawal on this particular business, it's very important that we hit this hard in the shorter term. We'll specifically be calling out protein because that is on trend with hickory smoked ham, with our Angus beef that we've just swapped out in the product, as well as applewood smoked bacon, which gives the cues and clues of the real food that we really do put in this product each and every day. In addition, we'll be improving the overall nutritionals of the business. We do this through reduction of sodium and as Jeff mentioned on the meals business, the reduction of artificials, both flavors and colors, which will be out by the end of the year. On the targeting side of the business, we feel that this business is really well positioned for growth, as I spoke before. Millennials are already a very large and overrepresented population in this brand. They represent, as their buying power increases over time, significant growth opportunity and our ability to keep this business vital for years to come. Hispanics as well, even though we've not been explicit in our communication to Hispanics, are a significant portion of the franchise, but we feel being more explicit and having specific communication towards them will better enable us to leverage that growth trend and that population in the U.S. On innovation for this particular business, it's really, in order to ensure we get incrementality, is about bringing new users into the franchise or new occasions. And there are three areas that we'll be focused on. The first is ethnic opportunities, with our hero being Hispanic. Well, in conjunction with the communication I just talked about, if we have products that bring that forth in a Hot Pockets way, we believe it'll enable us to better leverage this growth opportunity. Snacking, it continues to grow in the U.S. We see it as a very dynamic way that consumers will continue to eat. And as new subsegments form in this category, we feel there's an opportunity for significant extension into new usage and new snacking occasions. Breakfast, we have a business there today. We'll continue to extend. We feel the bigger opportunity in here is what we're calling breakfast snacking, which takes place in the entire morning day part and will continue throughout the day. It's more of a bite-sized opportunity and new usage occasion in the category that we feel we're uniquely able to capitalize upon. Winning in retail is about execution, and it's about simplicity and making a more effective business model. So the first thing I'll talk about is our SKUs. So over the course of the last 12 months, this brand has reduced SKUs by 50%. As you can imagine, this has made the effectiveness SKU by SKU much stronger in our portfolio, driven simplicity throughout the value chain and driving savings for us across the board. We've been able to do that by keeping our top line flat, which has been very effective for both businesses. I'll talk about pizza in a minute. The second area is delivering value. We expect this consumer to continue to be stressed from an economic standpoint, and our ability to deliver on this is a competitive advantage. And we see this in two ways. There's the consumer that's looking at value per sandwich or value per ounce, and we get at that in large pack size, where we can provide a value, and we can also have consumers stock up in what is effectively an expanding consumption category. So we'll continue to do that. It's been a growth channel for us, and we think there's more headroom. But secondarily, and more so today, consumers are looking to manage their cash flow personally. And especially as you get further away from paycheck or government subsidies, their ability to make the dollar stretch is becoming more and more of a challenge. So in those instances, our two-pocket package is more relevant than ever, and our ability to get to price points that allow them to extend their dollar. Our ability to toggle back and forth on these two strategies over the course of a consumer's own value stream, over the course of a month, is much more effective in our promotional strategy, with bigger, more value per sandwich items when the paycheck is delivered, to helping them stretch their money with lower price points as their money gets stretched. The final item on here is what we're calling a modern path to purchase. Both the pizza and the Hot Pockets businesses are heavily into digital today and doing a very good job when it comes to communication. But we think we can dial up that leadership and communication and get more effective at the interactivity that this particular medium allows, especially as consumers are using mobile devices more and more to make decisions, to see alternatives, and to interact in a value way with their brands. That concludes Hot Pockets. I'm going to take a minute to go through DiGiorno in our pizza category as well, but let me take a second to talk about what that portfolio represents. So we have 4 brands in our pizza category, which is in and of itself a competitive advantage that I'll talk about in a moment. At the super premium level, we have California Pizza Kitchen, which has a dominant share in that particular part of the category. In what we call the premium segment is where our DiGiorno, which is far and away the largest brand in the category, has a dominant share there. If you look at what we call the mainline segment of the category, that's where our Tombstone brand competes with a dominant share within that part of the category. And then finally in value, which is highly relevant today, an important part of our portfolio, we've got our Jack's brand that has a dominant share in that category also. And looking at the pizza category, one of the most important things to just take a step back at is to look and say this category has been challenged. And it has lost a bit of its relevance from its past heights, specifically to alternatives. And there's many reasons for this, but there are three very specific ones that are important takeaways. So two of them we'll talk about a lot today. The first one is in changing in the way consumers are eating, the definition of healthy as Jeff described. The second is in the economics of the individual consumers, especially in the middle and lower classes. And the third is an explosion of alternatives, primarily driven, we believe, through fast casual expansion and the alternatives that offers consumers. And as a result, we see a very highly relevant and growing category between 2007 and 2009, and then a flattening out that happened in 2010. And so winning in pizza is about returning this category to relevance and reestablishing our value proposition vis-a-vis alternatives. But we feel this is a great category for Nestlé to be in. The primary reason for that is this is the most iconic and emotional non-holiday food occasion in the American culture. It's the break we take after working hard with friends. It's the reward or the event that we take our kids to after a successful Little League season. And it is one of the only food categories and events where the actual food is the hero of the occasion. It is a pizza party. It is a pizza event. And in households throughout this particular country, we're seeing more and more time set aside where there actually is a pizza night in households, a growing occasion across the country where households are sitting down to have a casual moment where they can connect with their families and friends. And any food category with that kind of emotional resonance is a very important category and a category that can be quite profitable for Nestlé. Its penetration, as you can see, is quite significant, with 93% of the American population eating pizza once a month. And so the upside opportunity for profitable growth in this category with that kind of emotional resonance is a strong place to be. That said, we're going to need to return the frozen pizza category to relevance through our brands. And we see doing that in three ways. First is elevating the consumer proposition above commodity. The second is breakthrough innovation and renovation. And the third is using our portfolio more strategically. Taking these one at a time, adding a motive true value in this particular part of the presentation, so elevating the consumer proposition, is really elevating the conversation in frozen pizza beyond commodities. Over the last 3 years, most of the discussion has been about various kinds or varieties of commodities on a pizza. The crust, the topping, the sauce. And yet, this is one of the most emotive meal occasions that I've just talked about that exists within our culture. We need to elevate the dialogue and bring our product and our brands more in line with the emotional resonance that can exist. And that's how you will develop price realization. The second is, actually I'm going to go to the far right here and say grow with the right consumer targets. And you can see why pizza and Hot Pockets is together here, because they do focus on an overlapping consumer target. The millennials, already an extremely important part of our business today, becoming a more important part as they over-index in innovation like pizzeria. And then Hispanics, an important part today, even though we have not been explicit on this brand either. Being more explicit, more focused, more targeted against these two large and growing populations will bring growth in years to come. And finally, connecting with them in the correct way. Specifically, the lead brand and our biggest investment brand, DiGiorno, has been quite effective at communicating within digital. We need to extend that leadership position as well as deal with the interactive opportunities that exist in the online medium. Innovation in this particular business is about renovation and innovation. Renovation is critically important because as we talked about, the category's lost a little bit of its relevance recently. Part of bringing that relevance back is pushing our brands more into the main current of U.S. consumer trends. And in this particular case, it's cues and clues of fresh, healthy, and modern healthy, as Jeff has just described it. And so you're going to see a lot of renovation and renewal work highlighted by the most recent relaunch of the DiGiorno brand that you see the packaging of right there. Innovation on this brand is about bringing new value to the category versus what the category has done a lot of is parsing out the value that exists today. through new microsegments and product extensions and new flavor combinations. Pizzeria, as Paul pointed out, is a $100 million business for us today. But more importantly, it's at a 50% price premium to the DiGiorno brand, which brings new value to the category and also demonstrates that we can get price realization if we provide the right product and brand combination. Second item you see on here is a Design a Pizza kit, which is launching as we speak. And this activates both a customization benefit as well as an involvement benefit. And it's a product that does what I told you we need to do with our brands. It's a product that focuses on the experience of creating and cooking the pizza versus the commodities that might exist on top of it. We will continue to improve the health profile of our pizza. We do that primarily in these two brands in similar ways. Very big focus on sodium and getting the artificials out of the product. And we'll continue with the PHO work that's been done on the business. Portfolio is, as I said before, is a very important strategic advantage for this brand. This is one thing we do quite well in pet food that can be brought over to our pizza portfolio because it enables us to cover a larger part of the consumer landscape, where many of the brands across the entire category have more and more become the same with not very solid differentiation. In order to do that, we need clear and distinct brand propositions that separate these brands and increase incrementality, and product portfolios that bring that to life. And so you'll see that work is underway today. Secondarily, though, it's going to be important that we take this through Nestlé's strategic pricing policy, that we can actually pull these brands apart from a value and a pricing and promotion perspective so that Nestlé can yield more value from this particular category. And as an example, it allows, say, our value and mainline brands to more aggressively play the price game, freeing up our more premium brands to deliver more value to Nestlé. As with Hot Pockets, aggressive SKU improvement has gone on with this business. We've seen over a 50% reduction in the last 12 months on pizza. So to give you a feel, we run roughly, call it a $2 billion business with only 150 SKUs. And so that means that on average, our SKUs are now up over 11 million per SKU, driving great efficiency throughout the value chain. Last but not least is execution. So what's fundamentally important to understand about this business is that the purchase occasion and the consumption occasion are by definition delinked in two different events. In addition, this is by definition an expandable category. We know when consumers have it in their freezer that they will use it and they will use it more often. And so the way that we keep reminding consumers when they're in a store to buy pizza is by creating events and aligning our path to purchase of our mainline media all the way down to the point of sale materials delivered by our DSD organization to create reminders. Best example by the 6% market share improvement we just had in Super Bowl, which is one of the most important events of the year. We will always be looking at our distribution to ensure that we're in the most relevant retailers in the modern consumer context. Value stores or better said, maybe dollar stores might resonate more with the audience, has been an incredible growth engine for us and now a significant part of our business as the consumers continue to be economically stressed. So you've seen these strategies, and you've seen that Jeff and I feel we have the strategies on the consumer side, on the commercial side to grow the top line of the business. But turning around this business and improving its performance for Nestlé is going to be more than that. We have to drive simplicity and drive out costs and improve the business model as well. So I'd like to take just a few minutes to go over that. We'll do that in three specific ways. The first is the efficiency of our supply chain. As we've seen a top-line reduction in the frozen food business over the last few years, it's been critical that we look at our manufacturing asset base and the cost that's entailed there. And we have reduced that by 7% over the last 3 years, which has been important, and we'll be continually vigilant on our industrial footprint to make sure it's appropriate for the business today and where we need to grow. As we speak, we're moving a lot of our plants to continuous run operations, which will enable us to use the assets that we have far more efficiently and effectively. And Jeff's already talked about our 8 big kitchens that are geographically spread across the country. This enables us to keep a low cost of value chain. It also enables us to have a low carbon footprint and frankly have a fresher product on shelf day in, day out for the consumer. Paul talked about the creation of a center of excellence in Solon, Ohio. We've recently completed the movement of pizza. Hot Pockets was done previously. That strong retail presence is now partnered with our Nestlé professional food business, one of our largest manufacturing facilities, as well as a new R&D center, global R&D center that we're building there. provides synergies as opposed to the redundancy that it would cost to do them separately, but it also enables us to get deeper capabilities and insight, product development, innovation, and renovation across the business. And we've already spoken about optimizing the shelf and eradicating waste, which is an important part for us across the NIM. So as we look at a revitalized strategy, you can see here the sales is a -2% CAGR over the last 3 years, and trade operating net profit has been -7%. But it's important to recognize the effect of lean cuisine on those numbers. Because if you exclude lean cuisine from these numbers, that -2% goes to 1, and during this same time period, we've actually improved profitability by 4%. So in summary, we believe this remains an attractive category for Nestlé. We believe we have a robust strategic plan to grow both top and bottom line. Portfolio strategy is aligned with consumer trends, but also is focused on margin enhancement and return on invested capital. We have the world-class capability as Nestlé to drive competitive gaps, especially in renovation and innovation, and the creation of a frozen center of excellence enables us to drive those capabilities deeper and deeper in the future.